Here we go. Welcome back to Investing with Confidence. As always, I am your host, Joshua David, having a great time talking about the financial markets on this phenomenal weekend here in Bloomington. If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also text the word INVEST to the number 484848. You'll receive a link with the text back, but also we'll give you a call and make sure we got the proper dates for you. And if you're just tuning in, Al was shedding some light on the markets, what's happening in these markets, the different things that could be causing up markets or down markets, but how we or us as average people, the public, can use the same tools as the smart money. And that's where you make decisions off of a price chart. And Al, as you got into this next segment here, you want to talk about how we can prepare for really any market condition. There's a lot going on. There's a lot of things that could impact the market in a catastrophic way if you don't know what you're doing. That's a down market. Now, there are ways to benefit from a down market. What do you do here at Online Trading Academy to help people prepare before that happens? And then what are some of the techniques and strategies they might be able to apply that you're really consulting people with?
Yeah, the proper word there that you mentioned is prepare, because we don't know for sure how long the market will continue to go up. We don't know for sure when it will roll over. We know, looking at history, the markets always go through cycles. They will go up, they will go down. There will be corrections, there will be bear markets. And you're not going to get a phone call from the market saying, "Hey, get ready, I'm going to go into a bear market tomorrow." You have
Are you
to just
sure?
prepare. Well, I haven't received a phone call like that. If
Yeah,
you
it's
have,
too bad
please,
we're not on speed dial, huh?
please let me know. Make me a phone friend if you're getting that kind of a call. But when you look at history, inflation has been a big issue. There's a big concern there. Anytime we see hints of inflation coming back, the market reacts. And then there will be some other news that maybe shows that maybe it's transitory. But if you look at history, if you go back at what inflation has done to countries over time, it's been devastating. In 1923, Germany's currency became worthless. After World War II, Hungary, their government started printing money so recklessly that every 15 hours prices doubled.
That's crazy.
That is crazy. I mean, we see this. So we saw the same thing in Zimbabwe. It's happened in North Korea, Venezuela, Lebanon.
Can you imagine the printing that we're doing right now?
Well, and that's kind of the thing I'm leading into. There are all those countries that had these devastating impacts from inflation had 3 things in common. Number 1, excessive money printing. Number 2, excessive borrowing, and number 3, reduced production. Do we have excessive money printing now? Absolutely. I mean, trillions and trillions of dollars have been pumped into this economy, increasing our debt, which has a negative impact on the value of our dollar, our purchasing power over
Yeah.
time. Excessive borrowing. We've got record corporate debt, which has been caused by low interest rates and record margin debt. Reduced production. What we're seeing is that there's a lot of money pumped into the economy, but the unemployment rate is still high. So that money is not caused by increased productivity. We have reduced productivity. So those are all issues that can be of concern. We've got higher wages without high production. We've got reduced economic output. Inflation is at the highest level it's been in 13 years. Those things sound scary, but I think if you look at our country, we have a consumer bias in our economy. There is a lot of money that has been given to people that hasn't gone into the economy or the markets, so there's money on the sidelines that can help. But the other thing, of course, is the market overvalued? And there are indicators that we use and that the pros use to determine whether they think it is. One is the Shiller price-earnings ratio, the cap rate. Basically what it does, it just shows the market cap of stocks versus their earnings or average earnings over the past 10 years adjusted for inflation. The bottom line is that all you have to know is that when it goes above 30, that's a bad thing. The only times it's gone above 30 was in 1929 before the major crash.
Do you remember that?
I do not, but thank you for trying.
Oh, I got to get you at least once per week.
The year 2000, right before the dot-com bubble, and now it's well above 30. We've got, as you mentioned last week, the Buffett indicator, where
Yeah.
you're looking at the market cap of all the cap of the stocks compared to GDP. Typically, Warren Buffett says this is the best single indicator of market value.
Yeah.
It
Al,
typically, when
I
it's
think
around 80, he pulls back. He's got over $200 billion in cash.
and there's a reason for that, but I think a lot of people are kind of stuck in this. They feel it is overvalued, but they don't really care. It's not like they're preparing for that potential. So what do you do to help people prepare? How do you change that mindset?
That's one of the reasons that you want to come in for education, is to understand how to be properly prepared for that. And there are a number of things that you can do. The pros, for example, they understand how to benefit in a bull market, but then they protect the profits from the bull market, and then they go on to profit even more in a down market. And that's why there is such a difference between what the pros do from a return standpoint and the public. But the public can do exactly the same thing. It's just that the pros, the people that you have relied on to maybe manage your money, are not putting you in the same things that their companies are in, because they're benefiting. It doesn't really make any difference to them what the market is doing. They not only can benefit because they know how to benefit, but they also know how to protect their assets. Those are the things that we teach our students, and that's how you become properly prepared.
Yeah, and Al's talking a lot about, some of the things that could trigger a down market. I mean, down markets are actually very good. But if you think about it, this as well is with inflation, that's basically means the cost of our goods and services is going up. I mean, we were talking about earlier, I think it was Monday or Tuesday, we were talking about, I went to dinner last weekend, and a dinner for two was almost $300 for just two people. Now, that is inflation.
That is inflation.
I mean, granted, we were at a nice restaurant, but that nice restaurant, I don't believe it cost that much the last time I had been there.
Well, you know what? You before you have commented on have I been working out? Well, you know what? I thought I really had been, because the last time I bought groceries, $100 worth of groceries seemed much lighter than it did
That's true.
a year ago. Well, I thought it was my working out. No, it's that the prices were higher and the packages had less food in them. So
Yeah, you're right. Actually, candy bars are lighter now, or less volume of actually candy bar, and the price is actually going up. So that was their way to, I guess, save them some money, but still get the consumer to still buy.
you filled your car up with gas lately?
Yeah, that's going up as well.
Yeah, but the thing to remember is that inflation, there are assets and strategies you can use in inflationary periods that will benefit you. And one of the things you can do is have a portfolio that's properly diversified, not just having a large number of stock holdings or a number of different mutual funds, but it's having different assets and different strategies.
Yep.
Commodities, for example, if we have a market crash, commodities probably will go up in value.
You're right. With all this printing as well, it's devaluing our U.S. dollar. Well, that just hurts our purchasing power. And that's part of the reason why it's costing us more dollars to buy anything. And you're talking about, being diversified. If you're looking for more self-directing opportunities, there's markets out there that provide income potential to hopefully supplement that. So you don't have to worry about, okay, if things are going up, I'm not just relying on one income. Okay, do I have the opportunity or the potential to have two? And we're going to talk about some of that stuff coming up. But Al's talks about all this stuff in these investing classes. If you're looking to, understand and discover these different techniques that these professional institutions are using, he covers these in these free classes. They're only 2 hours. They're here in Bloomington locally. We do them during the week. We also have them on the weekend. I actually have one coming up this coming Saturday. So if you want to come to this investing classes, I'm going to give away 20 tickets. I'm also going to give away, for the first 10 callers, because you can bring a friend with you, I'm also going to give away the Financial Quick Start Kit. That will help you get started right away. 952-814-4410. That's 952-814-4410. You can also text, I'm going to make it easy, the word invest to the number 484848. Al, so with these, with listeners wanting to understand more about income potential, if our dollar is devaluing, if the price and the cost of goods and services is going up, they need to supplement that. what are some of the things that people like to utilize for that? And you mentioned a couple just a minute ago.
Well, yeah, and here's I think an interesting question. If you have a financial advisor, you might want to ask, why haven't you talked to me about futures? Why haven't you talked to me about the foreign exchange market? Why haven't you talked to me about options? And just see what the answer is. Well, first of all, a lot of advisors don't know very much about them, but it's not how they do their business. They have a business model that really is based more on a buy and hold strategy, which is a great model for them because it allows them to initially put a portfolio together and then tell you to hold on to it for decades. Don't worry about the drawdowns or the corrections. Well, what if you need cash on a shorter term basis? What if your objective is to increase your income now? Maybe the income from your job isn't quite enough to allow you to do the things you need to do, or even maybe pay the bills you have. Well, then if you need additional cash, what do? Do you stand in line at a convenience store and buy a lottery ticket and you cross your fingers? No, there are assets that your brokerage firm, their traders are using these things. They're using these short-term vehicles that bring additional money in and boost their bottom line. They're doing that on a daily basis. You have access to the same things. It's just that you're not being taught how to do it, and it makes the work too extreme for a financial advisor to have to deal with short-term trading vehicles. And if you need short-term cash, you need something you can get into and out of on a short-term basis. We cover these things in these classes. We're just looking at a couple of hours of your time to go over what could have a huge impact on your financial life going forward. Or it might help you decide, you know what, I don't want to have anything to do with the financial markets. I need to find another job or do something different. But at least you can get an idea of whether this is the right thing for you to do, and you can get an understanding of maybe some of the assets that can provide the answer to an issue or a concern or a problem you might be having financially now.
Well, it's people getting another job that actually takes them away from their family. The great thing about these markets is they're open 24 hours and per day. So you dictate when you do that, but also where.
Where exactly.
As long as you have internet connection, you can trade and invest from home. So that way, because people are searching for that income potential, but don't want to have to leave their families, don't want to have to miss, it's summertime, T-ball games, baseball games. I mean, different leagues that are happening right now. There's a lot of things that people want to be able to do, but sometimes they can't because they're at that second job. But we still have a lot of people that really don't need that second job, but still need those short-term vehicles. Because if you think about this, the stock market is at all-time highs. Now is the time to be in those short-term vehicles. It's kind of like you want to have the right vehicle when you're driving from Minneapolis to Florida. You're probably going to, let's just say Minneapolis to, Iowa, right? So you want to go to there the fastest way possible. You're probably going to drive your Ferrari rather than take a bus. You need those proper vehicles to do that. And Al, you teach investing classes here in Bloomington. Talk about those different vehicles in the markets to utilize for that shorter term income potential, not the long haul or that buy and hold, because people need that now. It needs it accessible to them now. So callers 1 through 10, we have investing classes that we do right here in Bloomington. Al teaches these. They're free. They're only 2 hours to introduce you to those different techniques and concepts to help you make better investing decisions. And it really helps people build confidence as far as where to learn how to buy low and also how to sell high, basically being in those right positions at the right time. So callers 1 through 10, I want to invite you to this class. You're going to receive 2 tickets when you call in. Also, the Financial Quick Start Kit. That will help you get started right away. 952-814-4410. That's 952-814-4410. And we talked a little bit about up and down markets as well. Al, we have a question on our live stream, and the question is why do markets fall faster when they down than they go up? Because of fear. There's panic in the market, and that's why people lose a lot of money in down markets if they're not shorting the market. So I think in the next segment, I want to talk a little bit about shorting, Al. So let's not forget that coming up next. But what do you have coming up?
Well, let's continue to talk about some of the ways that you can make sure that you're prepared for whatever market condition we're involved in. You need to be flexible and having the right knowledge, the right education, is what you need to be able to be flexible.
Al, you were talking about working out earlier. If you are a yoga person, you are or a yogi, I think that's what they call them. You are very flexible. Be flexible in the financial markets. Coming up next, 952-814-4410 for 2 tickets for the investing class. This is Josh and Al. We'll be right back.